12 ways business owners save on taxes. I'm John C., owner and operator of Grow Business Network, and today's topic for the week is 12 ways business owners save on their taxes. We are quickly approaching April 18th, 2022, and your business and I think personal taxes are due on that day. And unless you file an extension, talk to your CPA about all of this because I am not the expert. I'm going off this wonderful information that I found on 12 ways business owners save on their taxes. Before we jump into this topic, I want to encourage you to invite a guest this week. We're running our competition for the month of February. If you hit the goal that your team has set, that number of individuals that join your team by the beginning of March, you're going to get a huge reward. Talk to your team leaders about that. Keep pushing towards that. Great job, by the way, so far to many of our teams who have already grown their membership just within the last 2 weeks. Awesome job. So though tax season may not be your favorite time of the year, and some of you it may be, how to save money on your taxes may be a topic that piques your interest. I know it does for me this time of year. The IRS offers dozens of tax deductions for business owners and entrepreneurs each year. Not only do many deductions reduce your income tax, they also reduce your income subject to self-employment tax. Reducing your adjusted gross income may help lower your tax in other ways too. Number one, deduction numero uno, taxes. Many taxes you pay in the course of your business are deductible as business expenses. Some taxes are already included in business expenses you pay. For example, you pay a fuel tax for gas you use to drive your vehicle for business, and the tax is included in the price of gas. When you pay sales tax on your office supplies or a delivery truck, the sales tax is included in your office expenses or in the cost of the truck. You pay other taxes separately and can deduct them as taxes on your business return. These include state tax on gross business income, federal and state payroll taxes, personal property taxes on business assets, real estate taxes on business property, and excise tax you pay to the state. You cannot deduct federal income tax. Deduction number two, employee benefits. Benefits you pay under qualified benefit programs to your employees are a deductible expense. For example, you can deduct your cost of qualified accident and health plans, adoption assistance, cafeteria plans, dependent care assistance, educational assistance, and other group term life insurance coverage for your employees. Deduction number three, vehicle expenses. If you use your vehicle for a business, your vehicle expenses can provide a valuable deduction. Every time you go to the office, supply, or store for business, meet with a client, or drive for other company business, track your business miles so you get tax deductions that you deserve. You can usually choose one of two ways to calculate your business expenses. You can deduct a standard mileage rate, or you can deduct your actual expenses for driving your vehicle for business. To claim a deduction for this, the IRS will require you to track your business commuting and personal miles, and the business purpose of your miles, regardless of which method you choose. If you want to deduct actual expenses, you must also track expenses for gas, oil, service, interest on a vehicle loan, lease payments, insurance, and depreciation. Deduction number four, self-employed health insurance deduction. If you have income from self-employment and you buy your own health insurance, you may qualify to deduct your premiums as an adjustment from income. To qualify for the self-employment health insurance deduction, you must be eligible for health insurance benefits through an employer, your own, or your spouse's. The coverage can be for you, your spouse, and your dependents. The deduction cannot be more than your business net income. Deduction number five, first year depreciation of business assets. A special provision in the federal tax code allows you to deduct the full amount you invest in business assets in the year you purchase them, rather than spreading out the deductions over a period of years. Deduction number six, continued depreciation on business assets. If you purchased business equipment and other business assets in previous years but did not fully expense them in the year you purchased them, make sure you get the deduction for this year's depreciation for each asset. Deduction number seven, home office deductions. If you have an area in your home that you use as your home office or for any other business purpose, you may be able to deduct a deduction for a home office. you'll have to meet certain rules. In most cases, the space you claim as your home office must be devoted to your business and nothing else. It doesn't have to fill a whole room. However, say you use half your den as your home office, you may be able to deduct expenses based on the square footage that you use exclusively for business. Deduction number 8, internet and other service fees. The monthly fees you pay for internet service really add up. So might your cost to keep your work computer running. You may also pay for subscriptions for viruses, malware, control, professional references, and subscription software. Take the time to look for all internet subscriptions and other service fees that you pay that may entitle you to a deduction. Deduction number 9, phone service. If you have separate phones for business and personal use, regardless of whether they are landlines or cell phones, you typically can take full deductions for the lines you use for your business. If you only have a landline phone for both business and personal use, the IRS does not allow you to deduct its cost. However, you can deduct any long distance charges related to your business. Do we still have long distance charges? Maybe international. Deduction 10, professional dues and subscriptions. Professional dues and subscriptions add up, and they are easy to miss as a deduction. If you pay them automatically every year, deduct the cost of trade journals, magazines, subscriptions related to your work, and dues to maintain your professional license. Unfortunately, you cannot deduct dues to clubs the IRS considers to have more of a social or recreational aspect, such as dues to business, social, athletic, luncheon, sporting, airline, and hotel clubs. Deduction number 11, bad debts. If someone owes you a debt that comes from operating your business, you may be able to take deductions on your business return. If you use the accrual method in your business, you may have bad debts when customers buy things on account and then don't pay you. If you don't use the cash method, however, as many small businesses do, you cannot generally take a bad debt deduction for uncollected customer accounts. That's because you did not count the customer's purchase as income when they made the purchase. If you make loans in the course of your business to supplies, clients, employees, and so on, you can take a business deduction for the bad debts when these loans become uncollectible. Last one, deduction number 12, 1/2 of self-employment tax. If you're self-employed, you pay the full Social Security and Medicare tax on your self-employment income. There's no employer to share it in the cost. To help compensate, the IRS allows you to deduct 1/2 of your self-employment tax as an adjustment to income on your tax return. Interesting things. Hopefully all of our CPAs show up to our meetings this week so that they can really give us more insight into these 12 items and also answer questions that we as business owners have, as well as the bookkeepers who join our teams and are part of us as well too. So we look forward to hearing from you guys as the professionals in this matter. I'm John C. here in sunny Southwest Florida. Everybody have an awesome week, and I'll see you at your meetings.